So let's look at the file. So as I showed you in our previous meeting, I always start off with driver's license. Roberto Lenderos Ocampo, and make sure it's not expired. Date of birth is February 5th, 1964, and his mailing is PO Box, which you cannot search in Title Pro. But make sure the mailing address is not different from his current address. His address is 944 9th Street. Since he's owning, make sure we have property profile. If you don't have it, you can just pull it on your end, but junior processor is supposed to pull it for you. And then I'm gonna open up his personal tax return since he provided, and make sure the social security number is matching. 622095509. Okay, then I'm gonna go to page 1. His marital status is married per personal tax return. But if he completes ERP application, always refer to ERP application because that's the application that Bauer actually completed. So that should contain more accurate information than the income docs we have. Okay, so he is currently living at 944 9th Street, and let's see when he bought this property. So if you scroll down, there's a transaction summary. So his name on here, since 2004, she's been living at the current property, right? So I would calculate 2025 minus 2004. So it's around like 21 years, which I already put in Calix. As long as we have 2 years of residential history, we are fine. So we have more than enough. And then his income, if I remember correctly, his income was reported on Schedule C. Yep. And then if you look at his business name, it's registered as LLC. If you see any business name ending in LLC or incorporation, INC, or corp, CORP, then the borrower must have registered his business to the state. So always do the California business search or any other state business search if it's out of state. And when I did the business search, this is what I got. To calculate Schedule C income, you'll have to open up the self-employed calculator. I think this is what you completed, Vivian. I just reviewed what you calculated when I double checked your work. So go to the first tab. So for 2024, we always start from net profit for Schedule C, right? Then make sure line 6 has any income. If there's any income, you have to deduct it, unless Bauer can prove that he has been getting for over 2 years, then he will be getting this other income. But unless it's verified, you have to deduct other income. There's nothing, so you don't have to deduct anything. Then you can add back depreciation, which you already did. And if there's any depletion, you can add back, but there's no depletion for this one. And then if there's any deductible meals expenses, you have to deduct it again. Okay, but there's nothing, so you don't have to deduct. And if there's any expense for business use of our home, it will be reported in line 30. There is, you can add that back, but there's nothing. I'm gonna scroll down to the next page. The second page of Schedule C, Bauer usually reported the mileage that Bauer used to commute to business. If there's any number you see here, you can add back this mileage. So the way that you calculate is mileage, if there's any number you see in line 44A, you're going to put that number, and then it will automatically calculate it based on the each year's depreciation rate for the car mileage. Okay. And part 5, other expenses. If there's any expenses that you can add back, such as amortization, then you can add that back as well, but there's no expense that you can add back on this business. So this is what we got. Let's look at 2023 1040. Start from net income. There's no other income. And depreciation 27,520. And there's no deductible meals. Let's go to the second page. He didn't report any business mileage. And there's no expense we can add back in part 5. So this is what we got for 2023, right? If you go to the second tab of this calculation, the calculator automatically calculated into 24 months. So this is 2023 and this is 2024, right? If 2024 is higher than the previous year, we use 24-month average, right? But if 2024 is less than the previous year, we're going to only use 12 months average of 2024 because this is less than the previous year. Okay. So make sure you choose how to calculate the self-employed income for this specific hour. So when we use 24 months average, we get 4,352, right? Then make sure you click business owned self-employed. And for Schedule C, Bauer must have 100% ownership. So you're going to choose 25% or more. Okay, let's go to section 2 and 3. Bauer didn't provide any bank statements, but since this is cash out usually doesn't require any bank statement because for full doc, DU doesn't require reserve. So it's okay if you don't have any bank statement for the cash out refi. For rate and term refi, you might need it if there's any final funds needed at closing. But for cash out, you don't need. And if you look at the documents, Bauer didn't provide credit report. Elo provided this credit report, but this one does not belong to our credit agency, right? So new credit report has to be run, which we will request from the Elo. So from here, credit report, since we don't have our credit report, we cannot import. So if I have any other credit vendor's credit report, what I do is manually input the mortgage account. Okay. This one will be paid off, right? Since this is cash out, first TD cash out. Current mortgage has to be paid off to get the first TD cash out refi. And then you link it to the REO, right? And then if there's any other debts, monthly debts, including auto, revolving, installment, I add all this up and I put total payment here, 546. But if you add up all the debts I see on this credit report, you start from 546, 955, 300 to 25, 25, 91, take off 45. It was supposed to be 2,386, but if I put 2,386, DTI went up so high. You see the backend DTI is now at 88, right? Even if we structure this as FHA, the max backend DTI is 56.99. So it means that Bauer has to pay off some debts to make this file qualify. That's why I updated the monthly debt to 546 and emailed Danny that some debts need to pay off. And I listed out the payoff that I marked while I reviewed this credit report, which I'm gonna show you very soon. And in REO, since this is cash out refi, you have to disclose the subject property address, right? Make sure all the fields are completed and occupancy should be selected correctly. And then status must be selected as retained. You cannot get cash out refi for pending sale property, right? It has to be retained. And the mortgage should be linked. And then make sure section 4, 5, 7, 8 are completed. If it's not, you can complete it on your end, but make sure tell Junior that the calyx was incomplete. So make sure they complete for next file. Okay. So this declaration and demographic information should be completed. Okay, now let's go back to our information. So Danny drew this file to see if it's qualified for full doc cash-out refi. But as you can see, DTI is too high. So what I did, or what Vivian and I did, was have the borrower pay off all debts, right? Then DTI is at 46, right? And to lower the rate, because usually FHA rate is far better than the conventional, and because borrower wants lower rate, we someone join? Because the rate is far better than conventional, we structure this loan as FHA cash out. And when you are structuring the loan as FHA, make sure you put the MI. So click the mortgage insurance tab. Upfront MIP will be 1.75 for all FHA loan. And MI rate, monthly MI rate, you can go to MIP chart FHA. I mark this as favorite, so I can refer to all FHA loan. So you can just Google it, FHA MIP chart, then you will get to this page. There's a two parts. Usually FHA loan is 30 years, so you're going to refer to the top part of the chart. And based on the loan amount, you will determine the MIP rate. Since this one, loan amount is 220, it's less than 726,200, and LTV is less than 90. The MIP rate we'll be using is 50, which is 0.5. Okay. Then MI will be calculated correctly. Make sure you calculate monthly insurance and monthly property taxes based on the insurance copy and the property profile we have. You know how to do it, right? So once you do it, you're going to run pricing with NMSI pricing engine. And Vivian, remember, when you are running non-QM, full doc, FHA, you can use NMSI portal, but NMSI does not have VA pricing. So when you are reviewing VA loans, you will have to use Loan Shifter, the pricing engine that we use. So if you need any help on that, I can share you further instructions. But we do have instructions in our training folder, so feel free to refer to that page. And then this is what you email Danny on the right-hand side. So you told him that all debts must be paid off to get the loan qualified. And then you gave him the par rate, right? And then you requested additional documents, which is new credit report, bank statement, recent W-2s, U.S. citizenship proof, since his social security card shows social number for work authorization only. Yeah. Why did you request W-2? Is this all W-2? I don't think you'll have to request these two because this is cash out, so Bauer doesn't really need to show the bank statement. And also W-2, since Bauer reported his income on Schedule C, Bauer won't have any W-2 because he's self-employed, right? Bauer gets W-2 from his business when he reports the self-employed income with S Corp 1120S or C Corp 1120 or 1065 partnership. Unless those three, Bauer won't have W-2 from his business. So you don't really need to request this W-2, just so you know. Okay. Yeah. So that's it. And I think it's kind of slow, but I think you are getting it, Vivian. So let's keep practicing. And I'm going to go over several different scenarios so that you feel comfortable with reviewing any kinds of scenarios moving forward. Okay. Any questions?
I have clarification. Since this is a refinance and self-employed, and on the checklist for documents needed for initial review, it states that we need most recent 1 month bank statements, and you've said that we don't require that.
So for cash out refi, if it's full doc, you really don't need bank statement because
Cash out,
there's no reserves. Mhm.
uh, but if it's rate, yeah.
Rate and term.
So we require that because they
Yeah, because rate and term, usually borrower does rate and term to lower the rate. So they don't change the loan amount because cash out means borrower borrows more money
Mm,
than the current loan amount. So borrower is getting the money, right?
yeah.
So since borrower is using the loan proceeds, borrower doesn't have to verify any asset because there's nothing to bring at closing. But rate and term, sometimes borrower has to bring the funds at closing for covering escrow and title fees if the borrower does not change loan amount. So if that's the case, we need the bank statement.
Okay. And the most recent 2 years W-2s,
Mhm.
income doc type, that's only, we only need that if the borrower gets W-2 from the business.
Yeah, maybe I didn't explain in detail in our checklist then, right? You just were based off whatever the checklist that I put in our Notion page, right?
Yeah, I'm basing it there.
I'm gonna update it so that you can refer to that page for future files. Yeah, so Schedule C, you really don't need W2 because Schedule C is for the self-employee who's operating his
Um,
business by himself. So
okay.
they really don't generate W2.
This is more applicable with the S corp.
S Corp, C Corp, or partnership.
Okay.
Yeah.
Thank
Let
you.
me, I'll update this Notion page.
Okay, so I'll update the missing documents. Oh, and after we get all the needed documents, what should be the next step? Like we
If
send the
you get the
initial.
updated statements, yeah, if you get the updated documents, re-review the file because if you request maybe credit report, let's say, then make sure it's imported to Calix. After you import the liabilities, make sure DTI is still good. And if there is any other unexpected records you see on the credit report, you might have to ask LO for further. And if you get any updated bank statements or updated income statements, then you'll have to re-review those again. And if there's any large deposit you see on the bank statement, you'll have to request it from the LO or the source of the large deposit.
Everything is good. Like we have all the requested documents, and I did re-review the file. So
Hmm.
is it up to the loan officer if they're going to proceed with the application?
I don't get your question.
Uh, so we, so I already requested the documents and Ella
Hmm.
provided. I did review the colleagues and DTI is still good. So there is no need documents from our end. So what should be the next step? Are we going to initiate to ask the LO to submit the loan, or we'll just wait for the loan officer to instruct us to
Oh,
submit?
so for purchase file, I just wait since Power has to find the property to open the escrow, right? So for purchase
Um,
file, I really don't do anything until LO informs me that escrow is open. But for refinance, if you think the file is ready to submit, I ask LO if we have to open the escrow now or if you want to wait until you give us a confirmation. I ask that
uh,
question for the refinance transaction because for refi, we open the escrow, right? So
yes.
if you think file is ready to submit, then you can just ask LO if we'll have to open the escrow for loan submission and then have the LO update the lender and fee to submit. Then LO will give you the update for this.
Okay, cool. Thank you.
Mhm. Okay. Any other questions?
That's it.
That's
Thank
it.
you.
Okay. Mhm. All right. Thank you. Then I'll see you next week.
All right. Thank you, guys. Bye
Okay.
bye.
Thank
Bye.
you.